Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. Disclaimer time. This is where I tell everyone to lighten up. It's just a podcast. Trading is like that roller coaster at the amusement park. Thrilling, unpredictable, and potentially stomach-churning. What works for one person might leave another clutching their hat in the wind. Our hosts and guests, they're awesome, knowledgeable, full of insights, but we're not financial advisors. So don't rush to make any investment decisions based solely on our banter. Always consult with a professional or do your own research. Plus, let's face it, we like to have fun, laugh, enjoy the trading ride together. It's all in the name of good podcasting fun. So remember, take it easy, don't bet the farm, and keep your seatbelts on at all times. Thank you for listening. All right, hello everybody. Welcome to the China Shop, home of the Band of Traders podcast, and sometimes referred to as the Wizards of Wall Street. I'm your host, Kyle. Tonight I'm joined by Vanta Trading's Baba Yaga, Mr. Banks, and as an added bonus, we've got MacroTactical in the house. On tonight's episode, we'll be discussing how important the mental side of trading is, followed by our thoughts on hitting new highs this past week. After that, we'll look at our past week in the good, bad, and ugly segment before wrapping up with some new bold predictions. Before we check in on last week's results, let's get all this self-promotion bullshit out of the way. Let's see. We've got our Vico episode that Baba Yaga and I are going to be doing. Got delayed one more time. Luckily, though, we got another Clio special to release next week. This time, it's me and her sitting down with Bear Goes Long. As always, you can follow us on Twitter at FinancialInept1, or you can join the Discord if you want to get updates or send in your suggestions for future topics and guests. Last but not least, the shameless website plug, bandoftraderspodcast.com. Browse the guest directory, check out the deals and discounts, or catch up on the latest mini-series. How do you pluralize that?
I really think we definitely don't know.
Mini-series. Let's just move on. Baba Banks, you got anything to share?
Yeah, actually, we're fixing to, I would say probably in the next month, we're going to change the website completely. It may not appear to be completely changed when that happens, but we're updating a fair amount of that. Going to hold and host more content available for free. There are, if you were here last week or listened to last week's episode, we talked about kind of having this inspiration to change some things around in the Discord. We're not at liberty to disclose exactly what all that is yet, but I think everyone will. It'll be fun and it'll be more accessible, and we're excited about it. So hang around for a couple weeks, no, less than that, a week, and a lot of that stuff will be divulged. Right? Yeah, so I'm excited.
Me too. Macro, you got anything, man, you want to put out there?
Well, I mean, I don't have a Discord. Have never had Discord. Probably will never. Not that there's anything wrong with it. But I have been trading with a bunch of guys. They have. I don't know if anyone saw, but I just recently got back onto Sierra Chart, and they've helped me get back onto Sierra Chart and like set me up with all their chart books. And I was so mad at them, man. These guys are like visualize all like the shit I've spent out, like 10,000 hours on the DOM.
Tell me you've dealt with the customer service people or the tech support.
No. Actually, the customer service has been good to me because I started getting good at PineScript, right, and TradingView. So it gave me, when I moved back onto Sierra Chart for the second time, it gave me an appreciation for, I'm like, wow, these guys are actually fucking amazing. If you know what you're doing, you kind of understand it. But anyways, yeah, I've been trading with these guys. They invited me into their private Discord. I won't drop the name, but if you're interested, I may drop the name later. Just shoot me a DM and I'll send you along their way. And
Secret time.
It's cheating.
I'm pretty sure. I'm well aware of the Discord you speak of.
Yeah.
So those are good guys for sure.
Yeah, they're good guys.
What's your Twitter handle? Where can people reach you?
Oh, MacroTactical. It's MacroTac. Wait, TICAL.
I misspelled it so many times right in the episode script tonight. We'll make sure we have all those links in the episode description so you can check them out if you want to support the show and our panelists. But I think it's time now we check in on last week's bold predictions. Baba, what did you have for us?
My bold prediction was that we would three-peat the trivia, which really meant no, we would lose. That's right. Because it needed to be bold because we won 2 in a row. I guess I screwed the dates up, so that trivia has not happened yet. So stay tuned. I guess we'll find out.
All right. Put it off
that one, I thought it was this past weekend, I thought it was this past weekend, but it was not, and it's not this weekend either. So, oops.
Let's see. Joel predicted that I was going to be up money in my personal account. So far, he is actually looking pretty good on that. I've done just a couple of options trades. I sold some covered calls on Palantir, but I guess technically that counts. So
yeah,
I may do nothing else this week or the rest of this, but just so that way he can book that win. I think Banks just dropped out on us.
Yeah, typical Banks. Usually when you drop out, that's when pandemonium ensues. So now that he's not here, we need to make up some lies about him.
Well, lucky for him, Joel made his prediction for him, so I think he's okay for now. You remember my prediction?
Yes.
Yeah, it was actually wrong before I even made it.
Yeah, I know. You screwed your dates up too.
Yes, I did. Yeah, apparently the All-Star Skills competition was actually like before we recorded. I predicted that McDavid was going to win it. That was not the case. McDavid already had won it by the time I made that, so not my best showing.
I make predictions, but I do it in a roundabout way. It's very shielded. I don't like to tell people. Well, I retweeted this market year chart, right? It was like the NASDAQ analogy comparison. And I think it was in November last year. And I was like, man, it would be chef's kiss if this analogy happened and just to see the bear cope on the timeline. And it was, here it is. I just found it now. Oh man, this would be chef's kiss if this happens. The amount of cope on the timeline will be Hall of Fame level stuff. It was November. It was November 15, 2023 for the NASDAQ. November 15, right?
Okay.
So we're trading about 15,300.
15,300.
Where's the tweet?
Oh, here, I'll put it in our little chat. But anyways, it was, I retweet shit because I think it's going to happen without me actually saying it's going to happen. But, anyways, yeah, it went from, we're trading 15,300 and we're now trading at 18,000. And if the analogy sticks, the target for NQ is 21,000. Don't know when, don't know if we're going to get there, but that's what we're talking about.
That's bold.
And the analogy is a double. It's a double from the beginning, the 2023 beginning of the year. It's a clean double, 100%.
God damn. Yeah, J-Mac wants to know why you stopped at double.
Well, that's the thing, right? Like any fuckwit can give you an upside target, but it's when do you buy the dip?
Right. Flary saying triple Q's at 600.
Yeah.
God damn, that'd be amazing. Let's just go ahead and get into our first topic then, I think, guys. If you stick around to the end, we're going to have some other bold predictions. We're probably going to take turns, I think, predicting what the all-time high is going to be next week. But the topic, the first one for tonight, Baba, you came up with it. I'll let you go ahead and present it to the group.
The idea stems from a lot of the trader evals we've done, and I can't wait to hear Macro. We're just going to all mute, and you're just going to talk for probably like 15 minutes.
Okay.
And I think you'll have a lot to say about this because So the idea is when we meet these traders and we give them about an 8-page evaluation, they take this evaluation, and when they send it back in, and Banks and myself, we look through it, and we're just a third party viewing of strengths and weaknesses. So we tell them like, hey, here's a couple things that you are doing incredibly well that you need to lean into. You need to lean into these things, these parts of your demeanor about trading, your skill set. Here's a couple things that you need to work on. You need to, for example, sometimes off-process trades can be a real killer for most people. I'm sure we've all experienced that. Outside the plan, outside anything you have precedent for, you keep up with those over a month, and you realize that's $2,000 of negative equity whenever I go off script, right? But what we found over the big sample of data is most people have the skill set to execute profitable trades often enough to be profitable over a month. That the largest deficit we see is the mental ability to be rigorous and to stay within the bounds of what their work presents them with. And so the topic of discussion was, like 80-20, like trading it is important to be technical and to have an edge. And that 20% matters a lot. The skill of trading, the skill of pulling the trigger. But the thing that really releases the skill to fruition is the mental fortitude and, strength, I guess, durability to participate over and over, to lean into the stats, to know your numbers and know that not every trade is going to be a banger, but to have the willingness to accept when you're wrong and to not try to outthink yourself and become defensive. Yeah. And so you overthink, you don't pull the trigger, and we traded together for a year, or I don't know, probably longer. Yeah. And everyone that's been around you for any amount of time knows that you preach the see it, hit it thing. And that's as much a mental attitude as it is a technical ability. And so we just see the mental side being the real burden that most traders have. And I just wanted to explore that because I think a lot of times people are searching for the next thing that's going to really make all this easier, when what they're really trying to do is insulate themselves from any chance of ever being wrong.
Right. So let's just jump in. Let's just jump in here. So first and foremost, let me just say there's a lot of shit. Not that you guys are doing that. We're doing this, but listen, anyone out there who, if you're sitting at home, you're trading your own account, or you're spending money on these online prop funder eval type things, or you're in a PA, or you're funded. Don't get it twisted. I'm sitting here I think we're all sitting here and we're all rooting for you. I'm rooting for you. Like, listen, if you're spending the time and the money to invest into something that is going to better your life, better your family's life, or whatever your situation may be, I tip my hat off to you, and I fucking applaud you. Let's get that away. Done away first and foremost, right? There's so much shit talking on retail traders. I'm not having it. I'm not here for it. Because listen, man, it's a hard game. Like, I've been there. Believe me, man. Like, I've been. I would never consider myself an expert trader, great trader. That's just not me. And like, listen, I'm a little different to the typical quote unquote like retail guy, right? I'm ex-institutional, but I didn't learn anything from my time there, right? I didn't learn anything about day trading spoons or bonds or nothing like that. And I'm also in a unique position because I have a lot of my good friends are, they're in seats, they're prop traders, they're hedge fund traders, they're CIOs, whatever. And I'll say this to anyone listening, no matter the size you trade, no matter how much money you earn, it's the same. You boil it all down, it's the same problem. It's the exact same problem. So for me, so anyways, just to get that out of the way, if you're doing this, and the reason I'm saying this is because we're here on FinTwit and listening to all this stuff. Number one, it's entertainment, sure, but number two, we're spending if you're not yet pulling down the money you want to make, let's just use the figure of 10,000 a month outside of your job. You just want supplemental income. You're spending a lot of time doing this, so it's a time investment. So I've said this before on previous podcasts, or group calls that I've been invited onto.
Yep.
Take this shit seriously. Take this shit extremely, extremely seriously. You can joke along the way, but take it seriously. But anyway, so to go back to what Baba was saying, is it mental? It is mental, but and you spoke about my thing of see it, hit it, and see it, hit it comes from doing the work, not just the work, but you gotta look. Number one is, do you have enough screen hours?
Mm-hmm.
Yes or no? Do you have a mechanical process? And if you don't have a mechanical process, there are multiple mechanical strategies, quote unquote. Day trading is very simple, right? It's like whether it's a Bollinger Band breakout, whether it's opening range breakout, whether it's a fade, it's a VWAP band fade, whatever it is.
Mm-hmm.
Do you track what that P&L looks like through the day and compare yourself against it? Because you need to be real with yourself. Like first and foremost, like people talk about like the mental and Baba, I'm not cheating on what you said. I thoroughly agree with you. It is a lot of mental, but let's take a step back, right? So I've had traders DM me, and I've mentored younger cats in the DM, and they're really good at order flow stuff. Really good. They know what a footprint is. They know what the bid offer is. They know that large trades hitting the tape is going to move the market in a thin tape. They know all that. But what they don't have is a mechanical process. So if you don't have a mechanical process, how can you possibly optimize that? How can you possibly optimize something that you're just firing at the hip because you're just watching the tape? So I think people need to get a little. You just need brutal honesty to get better at this, right? So
I think what a lot of the people struggle with, and I don't know, Baba, correct me if I'm wrong here, but a lot of the traders that you guys worked with have strategies, have setups, have things that look like they should produce decent results. It's when the person goes off of that script, when they don't believe in it enough or themselves enough, or it's when they can't execute it, then there's something going on upstairs that they got to get figured out.
So lack of execution and lack of being able to see it and hit it, that comes back down to you just haven't done the work. And I don't mean that you haven't done the work in that you're not spending hours, hundreds of hours in front of the screens. That's not what I'm talking about. What I'm talking about is, and I'm more than happy to run, if you guys want to run like a screen share thing, I'm more than happy to do this because it's not proprietary. All you need to do is very simple. If you have Sierra Chart, Teton, like the whole historical thing, or you just use TradingView, you take a 5 minute, 30 minute, 15, 30 minute historical data, and you just pull that down into Excel. This is what I say when you need to look at the data. You need to pull the shit down, and you need to understand exactly the market that you're trading, whether it's ES, bonds, NQ, equities, CL, does not matter. But you need to really understand how these markets move. And when people say that, oh, they don't have the discipline or they don't have the conviction, you don't have the conviction just because you just don't know the market that you're trading. And that's not me shit talking. That's just me saying, hey, you need to. This is one part that nobody talks about because everyone talks about levels. They talk about setups. That's all well and good, but there's another missing part. There's a missing component that is the missing bridge between a trader knowing what they're doing and a trader having the conviction to press the button. And that's just historical data, right? Because if you look at a Monday, let's just look at equities. Let's just look at ES. And as the week, so you have a 5-day week, Monday, Tuesday, Wednesday, Thursday, Friday. Monday in a normal week, outside of Fed speak or some catalyst, Monday is going to be a quiet day. There's no data drops. Tuesdays, every other Tuesday, you may get a CPI or whatnot. Now, when we pick up into Wednesday, Thursday, Friday, the range is going to pick up. So that's when I can almost guarantee anyone who's shooting from the hip, their better days are Wednesday, Thursday, Friday.
Yep.
Because the market moves.
Interesting stat to go back and look at.
Yeah, and I think that's I love the idea of the ability to confidently rest into what your work shows you that you should do is found in the familiarity with the days, the statistical norm on a given day, and how you fit into that, how your process performs inside of that. I mean, we've been way off into days of the week, Mondays as they relate to Fridays, Tuesdays as they relate to Mondays, the type of ranges that you see, the days of the week that most often create the high or low for the week. A lot of that information has been helpful to me with expectation for what I think is able to be yielded out of the market that day.
Yeah.
You know what I'm saying?
Yeah, because like, and think of it this way, like what I don't see spoken a lot about on, X or Twitter or FinTwit or whatever.
We don't call it X here.
Yeah. Okay. That's what it's called. Okay, we'll call it Twitter. So what you see on Twitter, and it's think about, and this is something I don't really see spoken about. It just sounds so simple. It's a Monday, Tuesday, Wednesday, Thursday, Friday, right? Those are 5 days in the week. Why would a security trade differently on Monday to Tuesday to Wednesday, Thursday, Friday? And it's very simple. It's for calendar reasons, right? Because on every other week you have bond auctions. 10-year note auctions, 2-year, 3-year, whatever auction it may be, whatever data point it may be. Those don't fall on a Monday. They do not. They start to fall on Tuesday, Wednesday, Thursday, and then you get data on Friday. So, and you'll often see me tweet this, and it's about knowing your market. And knowing your market at the very bare minimum is just knowing the calendar. I learned this from Full Carry, at Full Carry, Ed Bradford is his pseudonym. Mm-hmm. But, and he speaks about, he when I was DMing him, he was like, man, all of bond trading, bond futures trading is just knowing the calendar. And it is. And I don't sell something, so I'm telling you that's how it is. But if I'm selling you something, I'm going to tell you to rely on the setups. Is set up this, set up that, right? Mm-hmm. And so just for full disclosure, before this podcast started, I was talking to Kyle about, what happened on Thursday, and I made $300 P&L on Thursday, and my commissions were $700.
Yikes!
And I was up $5-6 grand in the morning, but I said, you know what? It's a Thursday, and this is where I can shoot in the foot. So I'm just giving people the real here. So, and I'm not a stats guy. I'm not a maths guy. I'm not a programmer guy, right? So I like trading. I'm a trader, dude. Mm-hmm. So I know that on Thursdays, my historical stats, my historical probability shows me the ranges have a tendency to run on Thursday. So I'm looking for like momentum breakout style trading. Mm-hmm. So I'm going for them. I'm in a trade and it's in my direction. It's in my favor. And I'm adding maniac, looking for the break. And it doesn't happen. And I stop out at break even or like NQ minus. You won't believe me if I told you how tight my stops are in NQ. And it's fine. It usually works out for me. But Thursday.
Is it more or tighter than Banks? Banks has some pretty tight stops sometimes.
I'm 5 to 8 point stop.
That sounds about similar, right?
Yeah, I'm a little bit outside of that.
Yeah, and it just obviously depends on if I'm like big balling sell off. It's selling off, and I'm like, fuck you, this is it, and I'm in. My stop's 5 points, but if I'm wait for a microstructure confirmation, and I wait for it to bounce 5 points or pull back, short or long. Then I'll get in. Then I'll use it a little wider. But
what are you trading, Macro? Bear is asking.
What do I trade? So I used to be 50-50 ES and Q, and then the whole curve. Mm-hmm. So the rates curves. Then in 2022, I was 80% in the curve and 20% in equities because it was all one trade. This year, I'm 80% ES and Q, 20% UB, predominantly UB.
UB, huh? I see a lot of people trading UB. I'm probably going to have to start digging into that one.
Can we just pause being responsible for a second and reflect on when we traded copper together quite a bit?
Oh, my God, dude. Yeah. Asia Globex. Well, so this is a good leeway. Right? So, like, the reason my name on Twitter is it's a joke, right? It just started as it wasn't a joke. It was a reminder to myself. It started out as Leroy, like literally like Leroy Jenkins.
Oh wait, are you the guy the Leroy setup's named after? From
I
Larry?
believe he
Three
may
Finger
have.
Leroy?
Did you find you? He pretty much named that.
I'm not sure, but maybe well, because like that was happening around the same
It's
time,
gotta
right?
be.
Because
It's
like
gotta be.
it was a
Yeah,
joke.
yeah.
It was a joke because we were all like 2020, all sitting at home, and I'm like, you know what, fuck this, man. I was just if the trade's there, you got to take it, right? Because like that's the law of large numbers, right?
Mhm.
So it's you have to you have to let the EV play out. Like just imagine you doing all this work and you just don't take a trade because you're just maybe you took 5 losses in a row. Maybe you took 5 winners in a row and you don't want to take another one because you're guarding your P&L, you're trading your P&L, right?
Mhm.
You have to take the trade. You got to let the fucking EV play out.
Yeah.
So, and that was a reminder to myself, Leroy. And then I think someone said King Leroy to me. And I was like, you know what? I like that moniker. And so to Baba's point, like when he was talking about trading copper, in 2020, 2021, I think there was like a whole thing about like, it was like the fucking alternative energy type thing. And so there was like a
Yeah.
big catalyst around it.
yeah,
And so copper was moving heavy in the Asian session. And it was moving like, it was like crypto moving. You know,
Oh, yeah.
like a fucking idiot could trade it. You just had to get in. If you got in and you put a stop in. If it was like it's like a 1% edge in your favor. It's like even betting blackjack. That's what it was.
Mhm. What was the topic? Are we still talking about it or not? I kind of lost track.
Mental game. Well, sort of mental game versus the technical know-how. I think the point that you're making, Macro, is that the only way you have the mental fortitude to lean in when you need to is familiarity.
Yeah.
Mhm.
Both with your strategy and with the product that you're trading, both from a statistical standpoint and a day type commonality of ranges standpoint.
Yeah. Oh yeah, the mental game. Okay, so first I'll say this: don't fucking burn your PA account. Okay,
Yes.
you're better off spending whatever these 80%. When Daryl does his fucking save 80, save 90. Okay,
Daryl dollars.
you're better off spending $100 and burning that account than burning through your PA. And especially, like, listen, mental game, right? None of us need a guru. None of us need a furu, right? We all know, like, all you got to do is you just got to sit down. Yeah, I believe me, when I'm not on my high horse. I've done all the shit that I'm talking about.
Mhm.
Sit down and literally write down what are you good at, what are you bad at, and don't bullshit yourself. You need brutal honesty, right? So
That brutal honesty, though, I think is the hardest thing for some people to realize or to really open up and look at. You know?
if that's the hardest thing you're going to do, you're just not going to make it.
Yeah. Yeah.
That's it. That's a cold hard truth, right? And like, so people talk about like the mental game and shit, and like, okay, what is the mental problem? So, okay, let's talk specifics here. I won't name who this is because I have the same problem. Okay, trader, good friend of mine, very good trader, extremely good trader. He's hitting his, like, quote unquote, he's not a profit target, but he's hitting his daily, I call it a daily VAR.
Mm-hmm.
It's like the comfortable point where you're like, you do good and you're going to pat yourself on the back, but you're not going to, you're not going to jump up and down and be excited all about it. It's consistent wins.
Yeah. It's in your comfort zone.
Yeah. And then he drops the whole month.
Mm-hmm.
And that's not a technical issue. That's a mental issue. And we've all been there. I've been there. It sucks. And the most impressive thing about my friend, he took the weekend off, because usually on the weekend we're in the lab. We're like, everyone's just talking about shit. We're all sharing screens.
Right.
And he's like, I need to take the weekend off. Came back Monday and it was like nothing happened. And then he's putting up the same thing. And so that's where mentality matters to me.
Yeah.
He was advanced enough to realize he knew what he's done. So anyways, to close my ramble, it's like, listen, man, like we all know what we need to do. We all know our sticking points. So that's why you got to write it down. You have to write it down. Like I have it. So, okay, let's just talk me personally. And I spoke about this to the exact guy I'm talking about.
Mm-hmm.
I was like, man, what is this problem I have? I'm up a day's R. So not a trades R, but my days R, like my daily stop.
Mm-hmm.
I'm up my daily stop or a 2x my daily stop. And I want to keep going because I'm up.
Mm-hmm.
And that's my problem. And that's not a psychology problem. That's a market problem. That's me forgetting in the heat of the moment. I'm forgetting that a majority of the my P&L attribution comes from the morning because the morning session is more conducive to my style of trading.
Okay.
It's open, it's drives, it's rotations, it's wide rotations, it's drives. It's like, sometimes I'll be on voice and I'm like, I'm long here.
Mm-hmm.
And everyone's like, why are you long here? And I'm like, I don't know. I'm just long. I just feel it. And then I have a tight stop, but it works out because it's in the morning. It's price discovery. Price discovery is in the morning. But then once, 11 a.m. Eastern hits and then Europe closes, London closes, and then the whole shit reverses. Now we have different players. I always forget. And then I keep trading small. I'll trade small, but I'll keep trading because, and so that's mentality. That's mentality, but it's also me forgetting that, hey, you fuck with. The morning trade's over. Don't trade like you do in the morning, like you do in the afternoon.
Yeah.
Stop doing that.
There's a difference between trying to press your advantage when you're trading well and you're seeing things well. Like those are the times to press it. But when the conditions are changing and like there's actual stats to back up like that this is not a good decision, then yeah.
It's not a mentality thing. That's a do you understand your market thing. And when I say you, I mean me. I'm talking to myself too.
Right.
I always have to remind myself, like, hey, it's 8, it's 11. I'm on West Coast time, right? So 8 a.m. is 11 a.m. Eastern. So I now have 30-minute markers. I have notes on I have a printout that I keep on my desk
Mm-hmm.
of like each 30-minute block of like what to expect. So the first 30 minutes, there can be noise and an open drive up or down, or it's an open drive up and then they take it all the way down,
Mm-hmm.
or they take it down and they reverse it all the way up. Those are wide rotations. Let's just say we're talking about NQ, okay? So like in the morning, you're gonna get rescued, not rescued. You're just gonna get more purchase for your entries, assuming you get in at the right spot.
Mm-hmm.
Now, as the day progresses, you're going to get these little minuscule 10, 20 point rotations. Now, so we go back to the day of the week, Tuesday, Wednesday, Thursday, you're getting the auctions. So that's 1 p.m. Eastern. Then you get you get a range compression release. Now it's completely different players. Then in power hour, you get a different player.
Mm-hmm.
That's why you see, holy shit, why did fucking NQ rip 60 points out of nowhere?
Right.
and that's not a mentality. That's not a mental. That's a do you know your market problem? Do you know the players and the times that these players come in problem?
It sounds more like it's a confidence problem and you need the data in order to build the confidence in what you're doing. Yeah.
Yeah, well, if you continue to try to trade, let's say with the perspective of, hey, this setup yields this kind of move, I scale in this kind of way. If you're like, I'm going to do it the right way today, and you sit in front of the computer, in front of the screens all day, as those different things transpire, your expectancy should be fluctuating with that, or you should be aware of where you fit into the big story. But I could see a scenario where someone is continuing to try to press through all these different things that are unfolding during the day based on the time of day that it is. That takes a huge toll mentally if they at the end of the day go, oh my God, I've got, I was up like the story you told. I was up this much. I kept on pressing. I followed all my rules, but and it like just deflated. I could see how that could just create the distrust in their own processes or systems to not lay it against that backdrop that you're talking about. I think that they go hand in hand.
Mm-hmm.
And I tweeted this the other day when it's like the reason trading is so hard is because you could have got shit canned yesterday. You could have got made $1,000, $10,000 yesterday. or the trade before.
Mm-hmm.
Trading's so hard because you can never, ever let that get to your head, because the market doesn't care. The market doesn't know. It does not matter what size you trade. But if you just made $5 and that $5 means the world to you because it proves to you that you can actually do this, and you let that $5 get to your head, and now you just loosen up on your rules and you get above your process, no one's above the process. That's why shit's so hard.
That's a good line there.
No one's above the process, dude. That's a good line. No one's above the process. You know, while we had this idea or this concept or content of sharpening the mental side, and I think this has actually been a really interesting way to explore that, because you're essentially just getting, as the listener, you're just getting the perspective and the thoughts of someone who I would say one of your edges is your attitude towards trading in the market. Do you remember, to go back in the history books, when we were all trading together for that like year and a half?
Yeah.
And we'll leave names out, but there was someone who was like, you basically said to them like, dude, I listen to you lay out a beautiful plan, and I make twice off that plan what you can make off of it, because you're not leaning into your own work. That edge that I think you have to just press in when you see an opportunity, that's a strong suit, like, for you, I think. And I think that goes hand in hand with the way that you trade, the way that you're wired up, the way that you approach the market, that it's so funny to go back and think about that, because, you were like, hell, I don't even know what all this stuff is. I just hear you say this is what's going on, and I just shred it while other people are still like looking at their mouse or trying to figure out if they want to be a part, and you just dive in. I think the fact that you mentioned like the idea of losing small is huge. There's something that is you can feel safe taking all those, if you had to take 3 or 4 stops to get positioned, there's a safety there. You're not out of control. You're not risking 30 points per contract to make 30 points per contract. You're risking 7 to 10 points or 8 points per contract to make 50 points per contract. And the fact that the math works on that, again, it breeds that confidence. I also think just having a focus on, like, you have a track record to look at, and you're honest with yourself, and all of that is mentality and attitude towards the game. And I think we didn't give a 1, 2, 3. This is the what it means to be mentally strong. I think what we've done is said, like, here are the attributes and aspects of what you need to be either growing in or thinking about or pursuing to be able to arrive at that destination.
Yeah.
Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. So we've gone a little bit long on this first topic, and I think what we need to do here is maybe go right into good, bad, and ugly. All right, so this is the part where we talk about the shitty things that we did throughout the week. Also the good stuff, too, so we can give ourselves a pat on the back and not feel like complete assholes. Who wants to start off? Baba, you want to kick us off?
Yeah, I don't mind kicking us off, that's for sure. for this week, the good was that there were plenty of days where I sat down with my notepad and was able to, I've got it right here, and as I flip back through it, so the good was that obviously the P&L was green on the week. That's good.
Always good.
I would say the specific good was today being a Friday and being a day I normally trade fairly small, realizing the opportunity that we had to kind of expand higher and leaning in a little bit in kind of a dynamic way, I would say. Just adding to strength is something I've been working on. And so the good for the week, I would say generally good, but the specific was the trades today. Leaning in on a Friday, adding to strength, scaling through into key spots, and feeling, having a process where I say like today was an A+ in leaning into the process, and also having a P&L that rewarded me for that. So kind of like biggest P&L of the 5 days of this week came on Friday, on today, and that was cool because historically, to Macro's point of knowing your data and knowing yourself, Fridays have over the last year are my least performing days, because in the prior year, the last quarter of that year, those Fridays just happened to be especially weak. So this entire past year of 2023, I traded about a third of my normal size on Fridays. But then today, I traded regular size because the setup was within, I had precedent for what was unfolding and was able to hitch my wagon to that party and take part. So
it was a rational decision is what you're saying.
Yeah, dude, leaned in. I just felt so great about executing. I would say that was the good. And if I could just say the other sliver of good is you guys that have listened to other episodes or been around, like, some of the challenges that I've been going through on the outside of trading, and just the mental, some of the pressures that new pressures that I feel, and any new challenge presents just that, a new challenge. And no matter how great you think you are, there's always a new challenge. And I had a lot of fun trading I would say the last half of this week. Like, I was able to enjoy it. And that has been a little bit difficult, not from a P&L standpoint explicitly, but it has just been hard to have a good time. And this week I feel like we just had a great time. Like, it was fun. Felt like old times. I don't know. So the bad was there was a day I did not write out a trade plan, which is the first time in like 3 months.
How's that possible?
I didn't. When I sat down, I went through it. I think the problem was I got up early. I did all my chart work. I traded some. I came back, did the morning show with the room. That day.
Okay.
And then we traded. And then when I went back to write my notes for the day, I realized that the damn page was blank. And I was like, well, I didn't even write my plan. And for me, it's the mechanical piece of putting the pen to paper that's very important. That ingrains everything. Now, I mean, it's drawn on the chart or whatever, but so that was the bad. And then I think the ugly was there was a day where I was kind of wrong-sided. I took a few swings that were great trades in great spots, but I should have been on the other side of the activity for the bulk of that day. And so the bad was the ugly was just trying to make something that just really wasn't there. It was just kind of a little bit of a strike, just a little whiff on that day. So
which day was that?
I think it was Thursday. It was an A++ short setup. And then
you're talking about this week?
Yeah.
That was. This is the day I donated to Terry's charity.
Yeah. So I was in. I don't know how to. I might have traded a little bit, but when we had I had for my process a great almost A+ short setup, and leaned into that and added to old school size to for people that have been around the Discord or have been around for the podcast. I've been trading a little bit smaller size the last 4 months, but that trade I was raring to go. And so, kind of in a full banger and got a couple scales off, but just realized, man, if I'd have been in a full banger for any of those, the other trades earlier in the day, it would have been a much better day. It was just, just a little blip on the radar, but, we lived through it. We survived. And then the awareness, Kyle, I don't know if you said it or it was like when I closed it, but I was kind of cheering for this pullback to continue and kind of like, pulling the market on and like, come on guys, step in here and kind of like being real verbal.
Yep.
And then I realized, and then
you were pleading, I think at one point.
Yeah. And I was like, you know what? Like, I'm done. Like, I'm done. This is not the pace I want to see. Like, I'm flattened here. I was like up 10 points on that trade specifically. At that point, I just cut it. And I'm kind of proud of that. And then you even mentioned like, you were like, yeah, I think that was the right choice, like jeering it on. Like, it was a good move. So, but anyways,
the difference between you and me is like, well, I guess I'll start with my bad is that Thursday I did not do that. And what makes that go from a bad to an ugly for me is that there was a moment that I clearly remember saying to myself, like, what are you doing right now? Like, you should just walk away. And I still put on one more fuck it trade right after that. No, that's the account that I've been a lot more loosey goosey with. That's that Top Step X account. It's still alive and kicking, still actually profitable, believe it or not. Had a real banger of a trade today, and that kind of ties into my good this week. I've had 300-point runners this week.
Yeah,
you
have.
Oh shit!
Yeah, you have, baby. Let's go. Kyle, look, hold on, Macro, Kyle, everybody, hold on. Hold your cheers and applause. Kyle, you need to celebrate in a real kind of way, either whatever that means for you, the fact that you have done that. Because I want you to think like 4 months ago, the likelihood of that happening for you, or even your awareness of like the markets, and not that you didn't know anything. We're always learning new stuff and growing, but like I've said this multiple times to you, like, Kyle, you are making huge strides. You are killing it. Do you stop and celebrate that stuff? You should be celebrating.
Yeah, you should.
You should be cheering yourself on. And you gotta
celebrate the wins.
You got a dang week with 300-point runners. When have you had a 100-point runner before this?
I think I had my first one a couple months ago.
I'll remove a rib for you.
Yeah. Like, you've had in a nice way, I mean this, you've had a low enough number of those occurrences in your trading that you remember the last time it happened, or you and you probably remember never having achieved that. And then
to be fair, I also just recently started trading NASDAQ too. So
yeah. Okay. Well, there's that.
Wait, let me interject. Let me interject. So that's a fucking great point. The wins.
Mm-hmm.
What mental game helps the mental game immensely. And I said this to our friend Baba. We were talking about the big loser, and I said, take a screenshot of this day of you basically going off piste and going undisciplined, going against your rules. The exact same thing that got you to this P&L pad. Take that day, take a screenshot, print it out, put it on your desk.
Yeah.
The worst day, because you feel it, you know it. But Kyle, to what Baba was saying, on the flip side, you had a fucking 300-point runner. Take a screenshot of that, print it out, put it on your desk.
3 different 100-point runners, not a 300-point runner. That would have been amazing too.
Same shit.
Yes,
same thing. Same thing.
No,
same
but
shit. Take a photo of that. Take a screenshot of that. Print it out. Like, you got to celebrate those wins.
Well, you got to take a moment to take a step back and see where you've come from, and I think that's kind of the point you guys are making. But
he's making that point, which I agree with. But I'm making another point. Of like, because when you see that photo, you're like
to bring yourself back to that moment.
Like, you take a look at that, you're gonna remember all of the things that you did. That's just how human behavior works.
Mm-hmm.
And just looking at that photo of just looking at the screenshot of the price action and have your executions on there, you're gonna see that and you're gonna be like, okay, this is what I did, so I just need to repeat that. Or this is what I did and I got fucking bent over and just like.
I love that, man. I wrote a note. Yeah, I'll do that.
I'll go over. Let me go over my worst day.
Okay.
Which I told you, briefly mentioned. It was the Thursday this week, and this is how
interesting that we all had the same worst day.
Well, I had a worse day, and I can measure it, and I can tell you why I had a worse day. And this is why I want anyone who's listening to this. And again, I'm by no means, I'm not running $100 million prop book at some prop shop. I'm same as anyone, but this is the level of operator that I get to.
Mm-hmm.
I know that on a Thursday is the widest range day historically for equities for the trailing 5 years.
Mm-hmm.
That's how far back I go. What happened on Thursday? Jobless claims, a once Fed speaker, 130-year bond auction.
Yeah.
Where and then so I'm thinking, where are we in the curve? We're priced out. We priced out cuts, then we priced in cuts. So it's a big supply week, right? So
Mm-hmm.
and most FinTwit traders, we're long Vega. Long Vega means we expect we expect ranges to move outside of the implieds, right?
Mm-hmm.
Guess what the fucking range was for NQ on Thursday?
Was it like 60 points?
It was 90 points.
Yeah, it was inside 100. Yeah.
Guess what the fucking ADR 10 is?
What?
245.
Yeah, it was an atypical day. I remember thinking.
Guess when the last time that NQ had this small of a range was? It was Thursday, December 28th. It was a holiday trading week. That was the last time. That was the last time NQ had such a tiny range. So this is a level of like autistic operator I get to. But that should tell you something. That should tell you something. That's like
100%.
I'm just a retail fucking slinger. Okay, this is the level of detail that I go down into. But the reason I got fucked was because I was like, okay, this is Thursday. We have two events on the calendar,
Mm-hmm.
right? So I'm in a trade, and it's going in my direction, and we're pushing levels that I think that it should move. So I fucking maniacally add into it, and it doesn't work. And so it's a 90. That was my worst day. Second worst day, I posted in this chat a link to one of my tweets, and it wasn't even a loser. I didn't take. I went second worst trade. It was last Friday, like on the second. It was TN, the 10-year ultra bond note futures, 111 and 17 ticks. I'm looking at the chart right now. I'm watching the DOM, and the volume traded at the price was about 12,000. It's a clean taper. There's 577 down on the lowest part of the day, but I'm managing an NQ long because I want to add, because I'm like, okay, this one's moving. I'm looking at this, and I'm like, I was fucking kicking I'm still remembering it a week later. I'm kicking myself because I was going to take TN and UB long, right? And I was going to size the fuck up on this long because I was 3 ticks of risk. I watched this go from 11,000 lots traded at this price to 683 lots traded. So someone stuffed them with negative delta. Some fucking asshole was smashing the bid, got nowhere. 80,000 of them. 80,000 lots, matter of fact.
Jeez, yeah.
So I wanted to get long, and I tweeted about this. And I was like, talking to some like the DMs, Discords, whatever. I'm like, yo, I'm looking at this level. I want to get long, and I didn't get long because I'm managing a NQ position. This thing pops fucking 10 ticks, 10 ticks on size in bond futures, rates futures. So that's like a
substantial, isn't it?
Yeah, it's It's 3-to-1 trade. It's a 3-to-1 trade. Yeah, that was my second worst trade.
A trade you didn't take.
Oh yeah. And again, go back to the mental, right? And like this is not me telling me this, is something I heard from Baba, a friend of ours. It's like it's upstuck.
Oh my god, yes. Yeah.
I hear Flurry say that all the time.
Yeah, no, I'm not talking about Flurry, but yeah, I've heard Flurry talking about that.
Tell us something good, dude. Tell us something good.
Yeah, tell us something good that you did.
Something good this week.
Okay, so this is good. This is not a river mover good. I'll tell you guys this, but without giving away the secret sauce that me and my group have come to. Mm-hmm. Did you know that in a normal NQ day, there's about 800 points on offer, not the range.
You mean like the Orders on the book?
No. Like between rotations, there's about 800 points to take advantage of. Yep.
Yes, I got you. Okay.
That was the good of my week this week. And again, without giving away the secret sauce, just think about that for a second. Most people look at 1 minute, some time-based chart or tick-based chart.
Mm-hmm.
There is over 8 on a normal day. Like FOMC day, there's 2,000 points on offer there. I know because I looked. I did the math. And like, obviously it depends on how you trade. It really, really does depend on how you trade. But I'm telling you right now, if all you did was you just gotta look at the market in a different periodicity. Okay. Mm-hmm. And then eat your fucking stop. Eat your stop. But when you scalp well, it's not, you're not looking for, they sweep the lows. There's a fucking excess low here. There's like a buyer on the tape. Not that kind of trading. This is a different kind of trading. This is kind of trading where it's like, okay, so most people look at a 5-minute candle or 5-minute bar chart or a fucking DOM, and they just see up, down, up, down, up, down, up, down, up, down, up, down. It's not up, down, up, down, up, down, up, down. Those are 10 opportunities to get long and to get short on a scalp time frame. There's that FOMC day, there was 2,000 points there. And so my big win this week. So today, on Thursday, my worst fucking day of the week, plus $300 with $700 commission. Yeah, you can write that. You can tweet that out.
let me get right to that.
Get on it.
Today's win rate today. And by the way, in the last 2 weeks, I have 100% longs. Not a single fucking short. Not a single short.
Yeah.
But today, my win rate was 83% with a like 1.8 per. No. It's 13-1.
God damn, that's a good day.
But again, it's not a river mover. It's just today was. I'm naturally a long trader. Like, I don't like shorting. I don't like shorting unless there's a clear catalyst to do so. Like the Fed's hiking rates, and we're in a like 2022. 2022, you could just come in, just let them rip it, and just short blindly with micros, and just go. I'm gonna short here, +5, +5, +5, +5. Eventually, it's gonna go down. That's not this market. In fact, this market, and let's leeway into your next thing you want to do.
Yeah, bold predictions.
Bold predictions. You know what this market is? It's 2021. You cannot have the 7 biggest market cap names in the global economy, global markets, moving 3% daily. Okay, this is 2021 market. This means that it's not, you got to remove your biases. It's not, it's gone too high. Like look at NVIDIA, right? Oh shit, fucking man, like it's gone too high. It's, it's got to go down. My bro, you're not. You think real money. When I say real money, I mean like pension funds and shit. Outside of like ETF rebalancing and whatnot. Mm-hmm. You think anyone's fucking buying up here? No. You know what's printing here, dude. Nvidia's 3.58% today, the close.
Yeah.
This is a $1.78 trillion market cap company that's moving it's moving like a shitcoin.
Yep.
So what does that tell you? Yeah, look, dude, this happened in 2021. You know what happened in 2021? SoftBank. So what's happening? It's some players, or Bill Huang. Those type of players, these type of players there's stuff in the street making them short calls. So if you're a market maker, some guy comes in and says, I want to buy fucking 10,000 lots. It's 1 month vol, upside vol on this name. What are they going to do? They're going to sell it to you. And then if it goes through the strike that they just sold it to you at, what are they going to do? They're going to buy underlying, or they're going to buy another out of the money price, another out of the money call. So This market, the reason you're seeing a gap gap and go, or like these like crazy swings is because I call this ghost prints. These are ghost prints. These are people renting inventory. So everything that you see printed on the tape, it's some cunt that's just sold upside to someone else that needs to delta hedge or buy another further out of the money call, and some other cunt selling that to him, and they need a delta hedge that. Sorry for swearing so much.
It's all right, man.
I grew up in
Encourage
Australia,
it.
so. and that's what this is. These are ghost prints, right? So they're renting inventory. These prints are not real. They're real because your P&L hurts when you're short. So could it collapse? Of course it could collapse because the structure is not there. But guess what? If you're sitting there waiting to short, you're you're just not a serious trader. You really are not. Like if you're shorting this because you think it's gone too high, I mean, like, you know, I'll be your counterparty.
Right. Well said. Well, do you want to make a prediction on what the all-time high is going to be next week?
Q. Okay, so free game. It's not free game because I'm sure you guys all follow DCP Cooks, Don on Twitter.
DCP. I don't know that I follow him.
Don's he's an ex Eurodollar pit trader. Like he's on Twitter. He's like a Pax. He's like a Jimmy Jew.
Yep.
Jimmy
like OG motherfucker. Like anyone that talks shit. By the way, if like I've been trading since 2011. I got blooded in the European sovereign debt crisis at a hedge fund. Not a fun time at all. And the only reason I say that is I see so many people talking shit on like these old heads. I say old heads respectfully. That man, think like these guys have traded multiple market cycles and they're still slinging PA and they're sharing their thoughts on Twitter. You have to be a fool to not respect what these guys are trading.
100%.
It's like, listen, man. Like, okay, are you gonna trust a mechanic that's only worked on a Tesla, or are you gonna trust a guy that's worked on like a '70s Hilux or '70s pickup truck?
Freaking love those Hiluxes, man.
Yeah. So, anyways, upside prediction for next week. Why I said DCP Cooks. So free game, but not free game because he already spoke about it, and it was like a very closely guarded secret of mine for a while. It's just the linear regression channels. I use a rolling 1 year look back. It's TradingView. It's a linear regression channel. You use a rolling 252-day, rolling 1 year, and you just use two standard deviations. So for next week, the high for NQ, I'm calling 3% up move. So 18,600.
18,600 from Macro.
It's a 3% move. I own the 508 calls for next week. By the way,
I like that. I think that's sounds reasonable. I did mine on the Qs, and I was shooting for I think 433. Was my target. I was gonna do one rotation of the balance area that we were just left, because I think we were getting close to the 50% mark of that. I think we continue up and hit the next level.
Yeah. What level you say?
Oh, 442.91 was the level I was gonna go for.
I have 446.
446.
Yeah.
Wow.
Well, I must have done mine wrong, but I'm gonna write yours down on there too, just to see how it does.
My bold prediction for the high for next week is based off of a little bit of range work that we still need to do a video about, by the way. But I am thinking that the 18,446.25, that will be the high of the week.
18,426 or 446?
446. 18,446. So a little under Macro's 3%, but definitely, think that's plausible. We need a reason.
I'm surprised nobody wanted to take the bet that the high was today.
Yeah. I mean, look,
I'm not betting against that.
Monday's trade at least a tick higher than Friday's high. What is it, like 50 or 60% of the time or something like that? So, yeah. I mean, come on. We're in a market environment that's just pressing.
I'll say this. The one day that looked a little shaky was that Wednesday, Jan 31.
Oh, yeah. Yeah, I remember that day. What
happened that day? I don't even remember.
That wasn't an FOMC day, was it?
FOMC.
That was FOMC.
Yeah,
okay.
It was.
Yeah.
Okay. That was the one day. Okay. we closed on the lows. We literally closed on the lows.
We were so close. We were so close to coming undone.
Yeah.
Okay, there are so many reasons to be. Listen, man, like U.S. equities are a fucking cockroach. It's a cockroach, right? It's had 2 wars thrown at it. It's had fucking Israel-Hamas conflict.
Unbelievable.
It's had the Russia-Ukraine thing. It's had all the other litany of bullshit. And I know we said we're not going to get political. We're not, but it's had every reason to go down. There's debt, U.S. debt, fucking U.S. bond supply. Yeah. Oh, you want to get short after the first big outside down day? Nice, man. How convicted are you when you're short? You want to eat 100? You want to eat 800 points? Here you go.
Right.
The lesson is, if you do want to get short, you need a catalyst. That catalyst last Wednesday, Jan 31, F1C day, we closed on the lows. If you got short and got stopped out on that day's high, I respect a trade. That's a trade that I would have taken because the catalyst was there. Because he's babbling in the presser. He literally said, we don't know where the fuck our star is, right? Like the natural neutral rate. And like that's enough to, if you're like a macro boy smooth brainer.
I love that. I love the fucking terms being thrown out today.
We got a whole new set of vocabulary after having you here tonight. No, but I hear you. I mean, we talk about that so often in the room. We did an episode, either an episode or a town hall like alpha leak on, and that was one of the parts of it. I don't remember which, but was that the market is like a giant beach ball that's trying to be held underwater. It's always trying to rise. Everybody is long equities. Everybody is retiring. Everybody is pension funds are buying. I mean, everything is floating this thing up. We have to have something catalytic to create a fissure in that, to have that impressive downside move like we had in equities with rising rates. We had a catalytic event with dealing with the inflation and all that stuff, right? We had a catalytic event with coronavirus. We had a catalytic event in 2008, and we, I was loosely in the markets at that time. Like I remember what that was like. But go look at a weekly chart and look at how once we absorb that information and everyone settles out, what happens? Status quo comes back. And the market almost always goes a little bit higher than you ever would expect it to go before a short opportunity is created. And that's what we talk about intraday is like, we've seen it so many times where we sell. And then on what you would anticipate if it were a bid, if we were going higher, we pull back to an extent, you get an opportunity to rebid off structure, and you see that follow through move higher. Whereas on the short side, when we pull down aggressively and we come on bid up out of there, the reoffer is very unlikely to actually retain and create a new low. I think we've all kind of gotten caught on that at some point, and that's a real thing.
I'll get my institutional hat on here, right? So like the time references you gave, and you're very right because everyone talks about those time references. So 08 and 2020. Why would there be a liquidation event in 08 or 07, 08? Why would there be a liquidation event? Because people need liquidity, right? Balance sheet constraints. Right,
yep,
you're fucking short of money, so you need to sell anything not nailed to the ground.
Maybe even if it's nailed to the ground, you got to pry it up.
Right. So in 08, 0708, you go to your fucking prime broker, okay, and you say, "Listen, man, I got fucking." It's like the video that Priapus IQ, like Ryan shares, right? It's like, "Mate, I need to sell some fucking Taylor Woodrow," and it's like, "Yeah, I mean, how much do you have?" And it's like, yeah, I got fucking 10 million at the last bid was 105. I want to sell them at 100. Your fucking prime broker's gonna say, yeah, mate, nice try, 100. Try down here, it's 90. The price is 90. Right. So what happened in 2020? It's the same thing, right? And I can speak about 2020 because I tweeted about buying out of the money fucking Eurodollar calls. 2 weeks out before I even knew there was going to be a global epidemic.
Mm-hmm.
But why did 2020 sell off? Because people were short that people had the basis trade on, which means they were long the underlying cash treasury, and then they were short the futures. And that's not an alpha generating trade. And the reason hedge funds and institutions had this trade on, so what do prime brokers do? They're your broker, but they also give you leverage. And what do they do by giving you leverage? They say to you, hey, listen, man, we are going to give you leverage, but we are running on a use it or lose it basis. Use it or lose it basis means, hey, man, at the end of the year for next year, you need to tell us how much fucking balance sheet you want to use. And we can't calculate how much balance sheet you want to use until we actually see how much balance sheet you're using. And then we run our fucking propeller head balance sheet calcs off it, right? So, okay, so what do you do if you're Izzy Englander, right? You're the head of Millennium, or you're the risk manager for fucking Millennium, .72, Brevin Howard, whatever have you. Mm-hmm. You, at the last quarter, put on a fucking basis trade because you need to put that trade. What's a basis trade? You're buying an underlying cash treasury, right? And then you're shorting the future against it because there is a basis, which is a variance of like a couple basis points. It would be like, it's like buying something for 100, selling something for $100.05, and capturing the spread because you think that spread's going to converge.
It's like a low risk, low reward.
Right, and it's not alpha generating. It's just you got to use the balance sheet.
Right.
So what happens in 2020? Oh, something that no fucking MIT Ecole Polytechnique quant could have ever thought would happen, which is a global pandemic. And guess what happens? Guess what happens when the shit is hitting the fan? People got to buy bond. People want to go to bonds. They want to go to safety, quote unquote safety. Mm-hmm. They can't buy cash bonds. So what are they going to do? They're going to buy bond futures. So guess what? That convergence trade that you just had on, it's now become a divergence trade. So now your long is going the other way and your short's going the other way, right? And sorry, I rambled a little bit. And so after 2020, you're seeing, why do you not think that there is not an actual real sell-off? When I say real, like everyone's like, this is the top is in, we're going down 50%. You can only go down 50%, 30% even, if there's a liquidity event. Mm-hmm. What's the liquidity? Okay. We had 2022, the rates are repricing higher, right? Mm-hmm. Yeah, growth equities. Okay, cool, bro. We're going to reprice the curve higher. What are you going to do about that? That's when equity sold off. So NQ here, I'm looking at it. The high was like 16,500. We had a 40% drawdown. 2023, the SVB bank blow up.
Yeah.
Even that couldn't take the fucking greatest market in the world, in the greatest country in the world, the S&P 500 in the Star-Spangled Banner country. Couldn't take it down. Listen, no, but like in all seriousness, couldn't take it down. Could not take it down.
There's not just one bank; it was two banks.
Yeah, mid 2023, we sold off 11%. And you want to sit here and tell me that the high is in, and you want to fight against 401k pension fund money without a catalyst, and tell me this is the top. How bad of a trade is that? I'll be your counterparty. You want to buy puts? I'll sell the puts to you.
Yeah, no, thank you.
It's just a bad trade.
Macro, I hate to stop you, man, but I'm gonna have to wrap this thing up here before we go for 2 hours here. All right, folks, that's gonna do it for today's episode. I gotta say thank you to Baba and our special guest MacroTactical for joining us this evening. Everyone listening who stuck around to the end, please show our panelists some love. Check out their links in the show notes. Remember to check out the combined Discord server. You can trade with us during Friday end periods. You can listen in live to these recordings. You can even share funny gifts when you need to blow off some steam. Be back soon with another exciting episode, hopefully as impressive as failing a bold prediction before it's even made. But until then, pretend you're Michael J. Fox and hit that 5-star rating uncontrollably and take care. This podcast is intended for informational and educational purposes only. It does not constitute financial or investment advice and should not be construed as such. The hosts, guests, and contributors of this podcast are not licensed financial advisors, brokers, or professionals. Any trading or investment decisions made based on the content of this podcast are solely at the listener's discretion and risk. Trading and investing in financial markets carry inherent risks, and past performance is not indicative of future results. Listeners should conduct their own research and seek advice from qualified financial professionals before making any financial decisions. The views, opinions, and information shared in this podcast are those of the individual contributors and do not necessarily reflect the views or policies of the podcast creators or associated organizations. Produced by China Shop Productions.